again, like I said, let us look at from a client-centric point of view. What happens is, like say, there are options like say NPS. There is an option like say what we call PPF, and of course, like say voluntary PF is there. So there are multiple options across fixed income as well as like say what you call equity as an investment for a tax planning. Okay. So what happened? The client product-centric approach is like say directly recommending him like say ELSS scheme. Okay, so the client-centric approach is to start with the client, look at his cash flows, like say what is happening, and like say what is his risk profile and what is most relevant to him. So recommending that would be the client-centric approach. So that is one of the important differentiations between us and the competition, I would say. So and also like say that advice makes it as agnostic of product or asset classes. Okay, so the objective would be to help you reach your financial goals in the most efficient possible way, and not sticking to the products that we are actually somebody is distributing basically.
A very good evening on behalf of India FinTech Forum. I am Aditya Raj Kothari, and I have Mr. Kishor Kumar Balpalli, founder and CEO of myMoneySage, who has joined me to discuss about personal finance and his entrepreneurial journey. He is a die-hard optimistic. He believes that financial literacy and discipline is the key to one's financial freedom. He wants to be widely known as Kishor Kumar, the financial planner who disrupted the personal finance in India. A very warm welcome to FinTech Leadership Series.
Thank you, Aditya, and it's great to be here.
Yeah. So coming to the first question, myMoneySage is India's first hybrid platform for investors and financial adversaries. What was your vision behind founding the company?
Okay, so I always believe that personal finance is more about the person than about finance. Having said that, see, managing one's finances, like say there is an emotional component involved in it, and also there is an economic component involved in it. Even if you look at the latest, like say, survey by Refinitiv, which says almost like say 62% of the people seek human advisors for their advice or their financial decision making processes. So having said that, I think what we found was like say in India there is something which is rampant, which I call it as like say financial quackery. So basically, if you look at, I think we all know that there is need for like say unbiased and client-centric financial advice. But at the same time, like one should be qualified and also like say competent enough to offer such advice, right? So what we found was like say if you look at, I think there is also a shortage of like say what you call competent and qualified advisors having taking, if you look at the kind of like say the regulations that has been set up for the advisors to actually offer investment advice. So to bridge this gap, like say basically like say there is a need of like say what you call quality and unbiased and transparent and unbiased advice. At the same time, there is also like what you call limited supply of like say competent and qualified advisors. So this is when we thought we could take leverage of technology and also like say make it like say what you call make unbiased advice accessible to the masses. Okay, so that was the objective of actually like say what you call coming out with this platform. Typically, if you can see like say an individual can handle like say 150 or 100 to 150 relationships, or an individual advisor can actually take care of 150 clients. Basically, I'm referring to the affluent masses. So in case like say if you're taking leverage of technology, that can actually go up to like say what you call 250, 300. So the objective was to actually get this kind of leverage and also like say to subsidize the cost of like say what you call unbiased and transparent advice. So the objective of like say setting up myMoneySage, I would say to create an ecosystem that actually like say what you call fosters like say client-centric advice.
Okay. You have vast experience in the field of personal finance. What are your views on upskilling your clients on personal finance?
Okay, so I believe that I think even if you need to be a client or like say a person who's actually like say wants to pay for advisory, you need to be financially literate. I think if you look at the overall like say statistics in India, almost 76% of the population is financially illiterate. I think one of the what we call criteria that if you look at, I think for to be a fee-paying client or to subscribe for a service which actually like say offers you advice, you actually need to be financially literate. Otherwise, I think you will not be able to appreciate the value that is being offered to you. So that is one thing I think that basically, like say, I would, want anyone, like say, for example, to be, inspired, irrespective of whether you are actually, like say, asking for such service or not, or you should actually be financially literate. That is what I would say. I would actually say, if you look at, I think we have been, like say, what you call curating, like say, what you call information or content, which is actually, like say, relevant to the, like say, what you call to relevant for the clients to upskill themselves and also be abreast with the knowledge that they require to be informed, basically. So to, I would say, like say, whatever decisions, like say, irrespective of whether you have an advisor or not, or we have a platform or robo advisor or not, you should be able to take informed decisions. So that actually comes with the knowledge that you're going to assimilate. So we, as a what you call platform, will actually provide our clients with the information which is curated, at the same time which is actually helps them, like say, what you call, helps the clients to take prudent and rational decisions.
Okay. You have 17 plus years of experience in the field of personal finance, where you have interacted with different age groups. What difference did you find between the millennials and the previous generation buying behavior?
Yeah, so I think if you ask me, like, the difference between the previous generation and the millennials, I think, see, if you look at, typically, like the previous generations, more they were focused into, like, say, what you call lifestyle assets, like rather than not in getting into investment assets. Basically, when I mean lifestyle assets, like say, probably investing in an apartment, one apartment after another apartment or another real estate. So basically, like say, what you call, that used to be the trend actually. So now, actually, what I see is, people are more, what you cognizant of the fact, like say, what is an investment asset and what is a lifestyle asset. Okay, so there are, like say, for example, like usually what used to happen earlier was, like say, they used to get into one EMI, buy a property, then they get into another EMI to buy a property. But it is now, I think, there is a change in that approach. So basically, people would see, like say, okay, so whether I'm going to stay in the city for a longer period of time, does it make, whether it actually, like say, buy versus rent, which is actually going to be more like what you call, when I simulate that opportunity cost, which is going to be more beneficial. So that kind of decisions I see, the newer generation is actually, like say, looking at. And I think that is a welcome change. I think that actually, like say, helps what you call, people take rational decisions and also prudent decisions in course of their personal finance journey.
What do the millennials expect from advisories and the wealth managers in this era?
Yeah. Of course, I think the millennials, I would say, I think the platform is one thing where they have enough tools, like say, for them, so that they can also try themselves. Basically, I think they don't, what you call, entirely depend, what you call, are dependent on, like say, what you call advisors. Basically, they also, like say, would want to, like say, influence the decision of the advice that is being actually given to them. They don't take it, like say, just like that. So that is one thing I would say. And also, like say, the other thing is, like, if you look at, I think there is something called as portfolio alpha. So basically, like say, I think what a millennial, or like say, I would say, he always seeks is kind of, like say, what you call the additional returns over than the market what is offering to them. So if actually they are actually trying to hire an advisor, that is what I think they would actually ask for and probably look at. So if I are actually, like say, opting for a kind of, like say, what you call advisory service or like the fee-based service.
Okay. How does myMoneySage handle the technological advancement and changing regulatory requirements in the wealth management industry?
Yeah, I think see this. I think when you are in the business of, like say, finance, and also, like say, this, it is going to be dynamic in nature. Basically, from the point of view of compliances, there are going to be like multiple regulations that you have to abide by, processes that you have to adhere, and it is going to be dynamic one. It is like say, for example, it could be like say the compulsory introduction of CKYCs, or like say, over and above the EKYCs. So there could be, like say, what you call any other, like say, what you call the regulation where it actually emphasizes on the the requirement of an advisor to be a postgraduate, or the regulatory, requirements of the net worth requirements. So all this, I think, it keeps actually, it has been a dynamic thing. Have a separate team to take care of the compliances as well as the regulatory, part of it. So which actually we think it is going to be a perpetual thing. As long as we are in business, we have to actually take care of that. And of course, when it comes to technology, I think we have what you call a person who spearheads technology. But at the same time, I think this actually like also is a dynamic in nature. Like say, I mean, if I can give you an example, like say for example, we aggregate various accounts, like say with using third-party APIs. So, but now I think there is like say what you call that is account aggregation part of it. But if you look at, I mean, there is Sahamati, which is actually coming in, like say, I mean, and there is going to be like change in the infrastructure, the way we have integrated. So we have to be actually like say updated and keep in what you call pace with what is happening around. So that is, I think, unlike other like say what you call domains. I mean, if you are into finance and especially wealth management and wealth tech, so this actually is going to be a continuous process. Whether it is like say staying abreast with technology or compliance or the regulatory thing, that is going to be, I think, which is an inherent part of our like say business, I would say.
Okay. What are the most important changes that you have seen in the customer behaviors post-COVID?
Okay, so I think COVID, I think, I mean, has been an inflection point in many people's lives. Especially, I think, if you look at, I think people, I mean, people always thought that, I mean, some kind of, let's say, contingency will not happen to me, only it will happen to some other person. But this kind of made aware that, okay, so that it could happen to, us, or like say our near and dear ones, basically. So that is where I think people started like recognizing, okay, so that they have to like say what you call make sure that they should have a kind of like say what you call contingency plan in place, so that they need not dip into their savings or investments in case of any contingencies in their life. Okay, so I think that actually has created a lot of awareness in case of like say taking what you call kind of critical. It could be, I mean, what you call taking a critical insurance or health insurance, or even like estate planning, making a will. All those things, I think people are become more aware of it, and also like say I think they are taking action basically with respect to those and what you call risks that actually, I mean, which an individual is vulnerable to.
Since you are an AI-driven fintech company, bridging the gap between comprehensive and ad hoc approach, commission-based and fee-based approach, robo and human advisory, what are the challenges faced by you with the AI integrated system?
Okay, so the challenge, I mean, as you said, I think, we are like say, I mean, we are trying to be comprehensive, wherein like say not to be ad hoc, and that actually approach is basically more about like say being client centric, and also like say product and asset class agnostic. Okay, so what it actually entails is like say you will have to track like say all assets and liabilities. Like say in fact, if you look at in our platform, we try to track what you call not only the mainstream asset classes, I mean products like say mutual funds or like say what you call equities. We also do with like say your EPFs, PPFs, various other like say savings, and also like say it could be your liabilities like home loan or like say credit cards. So it is a kind of like say what you call the entire gamut of your like say what you call assets and liabilities that we track. So basically that actually, I mean, makes it complex. Okay, so because like say, I mean, each and every what you call product will actually undergo some kind of a change, and we have to be like say what you call, we have to be in pace with that. So that is one of the like say challenges that actually that we face. And the second thing is like say, I mean, if you look at the automation, it is like say what you call like say there is an element, I mean, there is not entirely all our processes are automated. Like say for example, there is an element of human advice that is also there. Okay, so that there are, I say, for example, if you look at, I think risk profiling could be automated, or like say we have something called as like say, marking people like based on the money persona. So those are the like say what you call like areas where we actually have automation in place. But I think this is still something which is work in progress, and it keeps happening over a period of time. And as I told you, that aggregation kind of all the aggregation is one of the challenges. And of course, like say what you call when you talk about commission and fee based, so we have actually like say limited ourselves to only fee based at this point in time, so that I think, I mean, not to make it too complex for what you call for the investors to, I mean, like say what you call to choose. So that way, I think we are trying to like say what you call we clearly differentiate. I mean, what is something which is actually, so that whether, I mean, to be automated or not to be automated. At the same time, like say what you call, I mean, when you talk about like say ad hoc versus like say what you call comprehensive, We are also clear about the kind of assets and products that we are actually covering, which actually, like say, most of it we are covering. At the same time, like say, when it comes to commission-based and fee-based approach, we are trying to stick to, like say, what you call fee-based at this point in time.
Other companies in your industry are attracting foreign clients, foreign investments. What does the growth trajectory of myMoneySage looks like in the coming years?
Yeah, so I think, I mean, we are also open. I mean, in case of, let's say, I think we do have NRI clients, or like say, I mean, not foreign though. So, but again, like say, I think we do service, like say, what you call NRI clients. Like say, that is the part of the question of clients. The second is, like say, I mean, foreign investments. I'm not sure, like say, what you call. I mean, if something, I mean, any investor is actually in line with our, like say, vision, and that is where, like say, we are actually looking, I mean, to be, I mean, it was willing to be a part of unbiased and client centric personal finance ecosystem. I think they are welcome. And so if you look at the trajectory, and like say, in the next, I think 4 years, we are looking to, like say, what you call, impact 10 million people. Okay, so to make a what you call positive impact of their financial journey, basically.
Okay. How is myMoneySage different from its competitors?
So if you look at, I think the competition versus myMoneySage, it is more about, as I've been telling, that it is about, like say, product centric versus client centric approach. So what happens is, like say, when I'm actually, like say, product centric, I will be more focused on the products that I need to actually give it to you, rather than, like say, what you call, I'll start with the product and try to sell the product to you. Say basically, like, in a sense, suppose somebody is actually, like say, what we call, distributing a mutual fund, he'll probably inevitably, like say, what you call, advise you to go with an ELSS for a what you call tax saving. So, but again, like I said, let us look at from a client-centric point of view. What happens is, like say, there are options like say NPS. There is an option like say what you call PPF, and of course, like say voluntary PF is there. So there are multiple options across fixed income, as well as like say what you call equity as an investment for a tax planning. Okay, so what happened? The client product centric approach is, like say, directly recommending him, like say, ELSS scheme. Okay, so the client centric approach is to start with the client, look at his cash flows, like say what is happening, and like say what is his risk profile and what is most relevant to him. So recommending that would be the client centric approach. So that is one of the important differentiations between us and the competition, I would say. So and also, like say, that advice makes it as agnostic of product or asset classes. Okay, so the objective would be to help you reach your financial goals in the most efficient possible way, and not sticking to the products that we are actually somebody is distributing, basically.
Okay. How has been your entrepreneurial journey so far? Any suggestion for the youth interested in investment advisory?
So I think, as you know, I think most of the entrepreneur's journey is like a lonely one, and also, like say, I think it has been a roller coaster ride for me. And also, like say, if you look at, coming to, our objective of, like say, accomplishing the goal with respect to myMoneySage, it is still a work in progress. So, the other question that you asked was, like say, I think, what is your, like say, what you call, advice to somebody who wants to get into, I think, investment advisory? I would say, I think this is something which is growing. If you look at the what you call the affluent masses market, and it is actually growing at a rate of 12%. It is expected to grow at a 12% per annum rate. So I think whether you are actually, want to be an advisor yourself, or you want to be employed with an advisory firm, or like say be a part of, like say, any well-tech startup, I think there is a lot of opportunities for one to actually explore career opportunities in case of investment advisory. I think this is going to be an emerging one. So that's going to be the advice for the future. People who want to get into um, investment advisory space.
That's amazing. I thank Mr. Kishor Kumar Balpalli, founder and CEO of myMoneySage, for sharing his valuable insights on personal finance and wealth management industry. Have a great week ahead, sir.
Thank you, Aditya. Thank you, and it was great talking to you. And yeah, thank you. See you. Bye bye.